balances and 1st October $1,000 cash and 2,500 in the bank account. There are no balances on any other accounts. Okay, there are no balances on any other. She has the following transactions for the first week of October. October 1st, Jana put her own money into the business bank account, 8,000. Bought goods for resale on credit from Dev. Paid rent by debit card 1,000. Sales on credit to Yash. Cash sales 700. Paid cash into bank account 500. Paid Dev money owed by check after deducting a 5% cash discount. Paid stationery by cash, $30. So prepare the necessary accounts and cash book to record the transactions. Balance the accounts at 7th October and bring down the balances. So first let us make out a list of ledger accounts. Okay. So first let us prepare a list of ledger accounts. So Jana put her cash account. So obviously opening balance, cash account. Bank account or cash book we can say. So this will come in cash book. Okay. So this is cash book. So even discount will come in this. But discount account also we have to prepare. Okay, then Jana put her own money into the business bank account, capital. Bought goods for resale on credit from Dev, purchases and Dev. Paid rent by debit card, rent account. Sales on credit to Yash, sales and Yash. Sales and Yash. Put cash into bank account contrast, so that will go to cash book itself. Paid Dev money owed by check after deducting 5% cash discount. So you have paid, so you have received cash. So cash discount received. That is discount received account. So Dev and bank, that is already paid for stationery by cash. Stationery. So how many accounts we need to prepare? 1, 2, 3, 4, 5, 6, 7, 8, 9, and 1 cash book. So cash book, this is ledger account as well as book of prime entry. So this is 1. So first we'll prepare cash and bank account. So then we'll prepare all these accounts. Simultaneously we'll prepare everything. Okay. So this is a comprehensive problem. So if you have not attended any of the earlier classes, which is based on posting of ledger, preparing ledger, posting of ledger, and all those things. So you can focus on this and you can get a clear picture of what has been done till now. So let us start. First October cash 1,000, 2,500. Bank 2,500. First October 1, cash 1,000 cash, 2,500. 1,000 cash, 2,500 in bank. So it is balance brought down. Balance brought down. Then Jana put her own money into the business bank account 8,000. Own money. Okay, own money is nothing but capital. Own money is nothing but capital. So Jana has put her own money into the bank account. So 8,000. So money is coming in bank. So money is coming in bank. So and what did this is first. So it is on first itself. Okay, on first. So money is coming in bank, debit bank account, and who is the given? Who is giving it? So it is capital. So complete the entry. We have right here October 1, 8,000. So it is bank by bank. We have received through bank. Next, bought goods for resale on credit from the 5,000. Purchases and 5,000. Purchases 5,000. So what date? Date is on October 2nd. October 2nd. So purchases account debit, their account credit, their account credit. October 2nd. So again this you have to write bill. Again this you have to write purchases. So the entry is complete. Next, paid rent by debit card. So debit card is obviously money will go from bank. So debit card is linked to bank account. So that's why money will go from bank. So we consider it as bank payments. Rent 1,000, debit card, bank, rent and bank 1,000. What date it is? Second. Second, rent 1,000. Money has gone out from bank. Okay, so rent account, money has gone out from bank. So it will come here. So next, so we have to record in the opposite side in rent account. So rent account, so 1,000. So October 2nd. So through bank we have paid. So rent account is an expense. Nominal account always debited. Next, sales are credit to Yash. Sales and Yash. Sales on credit to Yash. Sales. So what date? 4th. Sales on credit to Yash. Sales on credit to Yash. What is the amount? 3,000. Credit. Sales is always credited. So Yash. So opposite side. Yash account will be debited. Why are we debiting him? Because we have sold goods to him. Because Yash is the receiver, account that receives. Yash account receives. So debit the account that receives. Next. Sold on Yash. Cash sales 700. So what is happening? Sales is happening and cash is coming. What date? 4th. sales 700. Fourth, cash sales means money will come in cash account. Sales. So we are receiving money in cash through sales. So sales account will be credited on the opposite side. Sales account. So cash, how much? 700. So what did? 4 things. Paid cash into bank account 500. Paid cash into bank account 500. What date? 5th. 500. Paid cash into bank. So cash into bank. Cash is coming in bank. Paid cash into bank. So money is coming in bank. What date? 5th. 500. Cash is coming. Paid cash into bank means money is coming in bank but going out from cash. So here it will come. So it is cash payment and bank receipt. So October 5th. Same date, same line. So against this, so money is going out from cash and coming in bank. So against this, you have to write bank. So against this, you have to write cash. Next. Paid the money owed by check after deducting 5% cash discount. So whatever money you have to pay to the. So we have bought 5,000. Goods worth 5,000. And we have to pay after deducting a discount of 5%. On 6th, we have to pay. So how much we have to pay? 5,000, 5% is 250. 4,750 we have to pay on 6th. So we have paid 4,750. Discount is 250. We have received discount of 250 on 6th. On 6th, we have paid there 250. Discount received is 250 and money is going out from bank 4,007. So to whom we have paid? We have paid to Dev. So to Dev when we have paid on October 6th. How we have paid? We have paid bank 4,750 and discount received 250. And this we have to transfer to discount received account. Here it is discount received 250. What date? Only amount on 6th. October 6th. Cash. So we are trying to. So next. Paid for stationery by cash 30. Paid for stationery by cash 30. So what? It is on 6th. Paid for stationery by cash. On 6th. 6th, we have paid stationery here, October 6th. So through cash, we have paid stationery. Stationery account is always debit, and we have to credit cash. So because cash is going out, debit stationery with 30, cash. So now we have to balance. How do we balance? So what is the most important account here is the cash book. So basically what you have to do, you add all this. So 2500 plus 8000 plus 500 is 9.5 plus 10,000, and this side it is 1000 for 4750. It is 5750. 10,000 minus 5750. So what you have to do? You write down in pencil here. Write down what you do. You write down in pencil here. You write down in pencil. Here also you write down in pencil. So if you write down, you will get 5750. Here you will get 10,000. So 10,000 minus 5750, you have to subtract one from the other. So 10,000 minus 5750 is 10,000 minus 5750 is 4,250. So what you have to do? 4,250 you have to write here. 4,250 you have to write here, so that total on both the sides becomes same. So this side is also 10,000. This side is also 10,000. And this is called balance carried on. So balance carried on. So this side also it is 1,700. Here it is 530. So 1,700. This side is heavier. You write down here 1,700. So here it is 530. 1,700 minus 530. 1,700 minus 530. 1,170. So you write down 1,170 here. You write down 1,170, so that the total on both the sides become equal. 1,700. So this side is also same. This is how balancing is done. Okay. So now we remember we have to do balancing only for capital accounts and real accounts, because they will be carried forward for the next accounting period. So cash capital account is 8,000. Balance carried down is 8,000. So this will be carried down, to balance carried down. So will become by balance brought down. By balance brought down 8. So only the dates will change. So here it will be October 7th. Here it will be October 8th or October 17th. So balance brought down. So then, so purchases account 5,000. So there is no need to balance. This is 5,000 itself. You have to just, this will directly go to the trial balance. So they will account. Here also 5,000. Here also 5,000. So there is no question of balancing here, because the total on both the sides are same. Rent account. This will straight away go to trial balance. You have to write this as it is. Sales 3,700. This will go to sales account directly to trial balance. So if you want, you can just write the total. So this will go to trial balance. Yes account. So balance carried on. Balance carried on is 3000. So this will be brought down again. Balance brought down 3000. So discount received is 250. This will straight away go to trial balance. Stationery is 330. 30 is will straight away go to trial balance. So this is the end. This is over. What else we need to do in this? So balance the accounts at first and bring down the balances. Okay. Bring down the balances. This is how you have to do this balancing. Yes. So okay. So we'll catch up in the next class.
purchases account. So then bank account. Sorry, bank. So then sold some goods for payment. So what is happening when we sell? What happens? Money comes in bank account. Bank account. So 1500. So what is happening? Sales. Sales is there. Sales and gain comes. Sales account. Return comes and gain. So refund money to customer for goods return. So goods return refund money to customer. So it is sales return. Sales return is yours of sales. So we have to pay. Oh, so return goods to supplier receives refund. So supplier refunding. So return goods to supplier purchase returns. Purchase returns is the opposite of purchase. 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 So what is happening? They are getting refund. So money is coming back. So marriage takes 400 out of bank account for personal. So what is happening? It's dollars. Money is going on. So now what we have to do? We have to prepare like that. We have to prepare. So let us prepare user amounts, bank ledger amount, cash amount, Visa amount. This is the format. So bank amount. So always beside so always we have write the new amount in the list. So this is one. This is one. So or in account one. Started business by paying 40,000 into bank. So what is happening? Money is coming. Bank account is debited or credited. Bank account is debited. Bank account is debited. So what we have to do? We have to write here. So put bank account. So this is the name. Bank account is debited. Okay. So remember, sir, bank account. So what most of the students they get confused is something will be written here. They think this is debited. No, no, no. This bank account is debited. So bank account is debited and which account is credited? Which account is credited? Capital account is credited. Capital account is credited means capital account. So capital account is capital account is credited. 14. So this is the way. So capital account is credited. See, bank account is debited, capital account is credited. So now here we have to write why, how, because of capital. So this is known as completion of a so completion on the opposite side. So cash is debited with capital account. Bank account is debited with capital account. Capital account is credited with bank. So this will come here. This will come. Bank account is debited with cash. Bank account is debited with cash. Prisha's account is credited. So this is how we have paid. So finally, the books of account, ledger accounts will appear like this. So bank account is capital account, Prisha's account. So whatever we receive, we have written here. Whatever we have paid, we have written. So capital account is always credited. Capital account is credited. So Prisha's ledger account, she has given loan, so her account is credited. Equipment ledger account, it is an asset, it is credited. So we have paid by bank, so it is complete. Here entry is complete. So rent ledger account, because rent is an expense, it is a debit balance. Wages ledger, it is a debit, so it is wages ledger account, wages ledger account is $600. So similarly, purchase ledger account debited with $2,000. Sales ledger account is credited with $1,500. So sales return ledger account is debited with 300. Purchase return ledger account is debited with 500. So that is how it is obtained. So this is according to the entries whatever we have written. Entries whatever. We'll do this. First we have to write like this. Then we have to finish the complete. So this is how it is. So the final answer. So comparing the ledger account, the entries to the ledger. Just check whether your answer, whether everything is right. If everything is right, your answer is right. So very simple. You don't have to do a couple of answers for this. It is very simple concept, but remembering the logistics is very important, so that you don't commit mistakes in understanding the concepts. Okay. So we'll catch up in the next class. We'll do activity 1.2 of the series. So dear friends, let's continue with activity 1.2. So this is David Hopkins' latest book. This is from David Hopkins' latest book. Yes, this is David Hopkins' latest book. So complete the entries for the following table with information taken from the accounts of a trader. So name of accounts to debit, name of accounts to credit. So what you do basically, you start with your own. You see the question and answer yourself. Then you can compare with the answers whether you understood or not. Okay, paid rent budget. So what is happening? Paid rent budget. Money is going out. So money is going out means credit what goes out. So credit what is given away. So it is bank. So money is given. So bank account. So bank. So we have to write here bank. So postage and stationery is an expense. So debit. Postage and stationery only you can. So postage. So here bank. Why? Because money is given away. Credit what goes out. Telephone bill paid from the bank account by standing order. So whatever it is, whether it is standing order or whether it is given, whatever. So money will go out from the bank itself. So bank account. So here it will be telephone charges. So heating and lighting bill paid from the bank account by standing order. So heating and lighting bill, heating and lighting. So heating and lighting expense. Lighting expense. Bank. Paid wages by check. So what is happening? Wages account by bank. Why? Because money is going out from bank. Rent received directly into the bank account. So what is happening? Your money is being received. So bank account will be debited because money is being received. Bank account will be debited. Rent received. So rent received. So you specify because rent can be paid. See here rent is paid. So here the rent is received. So or you can write rent expense account or rental income account you can write. So rent received also you can write or rent paid account also you can write. But you have to specify because rent paid is separate and rent received is different. So this is an expense. Paid rent is an expense. Okay, whereas this is a revenue. So always we have to specify because we cannot mess up. So that is what is disclosure concept, which says that we have to disclose everything in detail. So paid bank interest received into the bank account. So what is happening? We are receiving money in bank and we are receiving interest. So interest received we can write. Interest received. So again interest can be received also and paid also. So that is why we have to specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening here. Drawings. So money is going out from bank, right? But out of bank account. So bank account. Loan received from a friend D. So what is happening? You are receiving loan from a friend. So all the transactions are assumed they are through bank. So you write money is being received in bank account. So but who is giving it? It is Lee who is giving. So credit the giver, credit the account that gives. So it is the Lee who is giving. So Lee account. Bank account, Lee account. So money is coming in bank and Lee is the person. Lee is the account that is giving. Loan repayment made on loan from Lee. So what is happening? Lee, money is going out from bank and who is receiving? Lee. Lee is receiving or giving. So Lee is receiving. When you repay the loan, Lee will receive. So Lee account will be debited because debit the account that receives. Okay. So be specific, be clear which account will be debited, which account will be paid. You have to be very clear. So then purchases paid by debit card. So whether it is debit card or a check or whatever, always it is money will go out from bank. So purchases upon debit to bank. Purchases upon bank account because money will go out when you pay out from bank. Debit card obviously money will go out from bank only because unless you have money in bank, money cannot be debited by bank. Sold goods and bank the taking. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is a revenue. Sales is a revenue. Sales is a credit. So credit all incomes and gains. Revenue. Return goods to supplier and bank the refund. So you are returning the goods to supplier. So supplier is receiving. So you will debit supplier. And money will go out from bank because money is given away to bank account. So refunded money to customer by check. Oh, sorry. So see, return goods to supplier and bank the refund. Return goods to supplier means what is happening? You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving it away. So credit the receiver, debit the receiver, credit the receiver. Debit no. Yes, but return goods to supplier and bank the refund. And bank the refund. You are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debited. Bank account will be debited. And we are returning goods to supplier. We have returned goods to supplier. So it is called purchase returns. It is called purchase returns, correct? No, it is purchase return, not supply. Okay, so this is not relevant. It is purchase returns. Purchase returns. So refund money to customer by check for goods return. So this is sales return. So when we have sold the goods, but we have received back. So it is exactly reverse of sales. Sales return. Sales return, and you will credit bank because money will go out. So carriage inward paid by check, whether it's carriage inward or carriage outward, money always go from bank account. So carriage inward, we have to specify whether it is carriage inward or not. Carriage inward. So carriage outward. So carriage outward is also an expense. Whether it is carriage inward or outward, it is always an expense. So money will always go from bank. So here it will be refunded goods to supplier and bank the refund. So we have received the money bank account. Will be debited and purchase returns will be paid. Purchase returns are opposite of purchases. Purchases are debit, right? So purchase returns are always paid. Okay, purchase returns. So this is how it is. So this is activity 1.2. So we'll continue in the next class.
Dear students, welcome. So today we'll discuss practice questions from cash transactions, David Hopkins' latest book. So before seeing this complete video, what you can do is you can just have a look at, you can try solving this question on your own. So which of the following financial transactions is most likely to require a debit entry? What is debit entry in the bank book? What is being received? So what you will receive when you purchase, you will not receive. When you rent receivable, obviously you will receive, so it will be debited. Sales returns you don't receive, wages you don't receive, so this is the thing we receive, so this is the answer. Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? So money will go out. Obviously, money will go out. A bank account will be created. Money will not come in. So money will go out. So then, when you are selling, Amir got goods, bought goods. When you buy, you pay carriage goods. So this is the one. So C is the. A trader takes money from the business bank account for personal use. Which entries record this in his books? No. This cannot be the entry. No. This cannot be the entry. So drawings will be the correct entry. So these are practice questions. What David Hubbins' latest book. Okay. So what you can do is you can just have a look at the next problem. So So below are the financial transactions for Mira's new business. Open is necessary ledger accounts and post the following financial transaction to them. All transactions use the bank account. Mira commenced business by paying 20,000 into her bank account. Mira then had the following financial transactions: purchased machinery, paid rent, bought goods, so paid carriage inwards, sold goods, paid for heating and lighting, received rent, bought more machinery, bought more goods. So what you can do is you can try working out this question on your own. And suppose you have any doubt, or if you are unable to do it, so you can leave a comment in the description, in the comment section of the video. So you can I will just help you work out the problem, and I will upload. So till then, have a good day. Bye bye.
Dear friends, welcome to Shasha's virtual classroom. So today we'll discuss activity 2.1. So this is David Hawkins' latest book, latest textbook. So we'll start. So below are the financial transactions for Max Business. Personal transactions to ledger accounts. All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than other than cash, cash transactions. How to record credit transactions? This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So if you would have found one part, the other part would have been easy. But here, it looks somewhat somewhat complicated. So, but it's easy if you understand the main concept here. What is the main concept? So, basically, we need to know the personal account. The personal account. So, whether this account is receiving or paying. So, we need to know this. So, purchase goods from Tina that cost 2,000. So, when we purchase goods from Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. Prepare purchase account. Because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account. Return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Omar account. Because sales account is already there. Omar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales. So basically we need to prepare 1, 2,
purchase account. So always the ledger should be so always date should come, always date, don't miss to put the date and the currency, date and the currency. Always. Okay, write always the heading. So which account you are preparing? So purchase account. Purchase account is always an expense. So purchase account is always an expense, always it will be debited. So see, this is how you have to remember, so that the logistics will be clear. So how much, what is the worth of goods you have purchased, and it is on October 1st, 2000. October 1st, 2000. So purchases. So purchases account debited with 2000. This is what it means. So a lot of students, what they get confused. So they write something here, no? So they think that if they have debited, no, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do we prepare Tina account? So this side is always debit, this side is always credit, always date, you have to write always date, always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is what. So a lot of students they get confused again here. So Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you have written 2000, here also you have written 2000. See, debit 2000, credit 2000. Obviously, debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts, like what one should be debited, the other account will be credited. So this is very important. So next, coming to the next. Sold goods to Ali for $300. So sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account and Ali account. Sales account. Ali account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd, 300. October 2nd. So it is always credit. This side is always debit. So how much? 300. See, sales is a revenue. Sales is always credited. Credit all incomes and gains. Sale is always credited. Sale account is credited by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So sales. So now one more thing. What is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. receives. Debit the account that receives. That is what we learned in rules in accounts. So Ali receives. So that is why we have to debit. So debit the account that receives, credit the account that gives. So this is the main thing you should understand. So very important. Okay, very important. So a lot of students they get confused with personal accounts. Rest of the accounts they do easily. So nominal accounts expenses they write off as an expense. Income account they write off. Revenue account they also write. Asset account debit what comes in credit what goes out that also they write. But in personal account they miss. They get confused. They think from the point of view of max business, but they try to think what max is doing, what max is doing, whether max is giving, max is receiving, or something like that. No, actually, you have to see what Tina, who was, what position is in Tina. So Tina gives, Ali receives. So this is what, this is very, very important. Okay, now what has been clear to you. So now it is, everything is easy. So then the account, the entry is complete. Next. So sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return goods to Tina that had cost 200. So now you have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited. Debited with 200. Tina account will be debited. Tina account will be debited with 200. On what date? Tina account will be debited with 200 with on what date? On 4th October 4th. So October 4th, Tina account is debited with 400. So, but why are we debiting Tina? Because we have returned the goods to her. So purchase returns. Purchase returns. So purchase returns. We have to open one account called purchase returns. This side is always debit. This side is always credit. Always in dollars. This in dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of that. It is always a credit. So what is the amount? 200, right? 200. We have to credit. So this is how you have to remember. There are so many ways of remembering things. So why? Because it is on October 4th and Tina's account. Tina's account. We have to credit purchase returns with 200 with a debit to Tina 200. This is how you have to read and you have to understand. You have to understand accounts. Very important so that the logical flow of concepts is very, very clear. Okay. So very, very clear. Logical flow of concepts is very, very clear. Now next. Purchase goods from Lim that cost 2400. So Lim is another person. So again, what is the Lim doing? When we purchase from Lim, obviously Lim gives. When we purchase from Lim gives. So that's why we have to credit Lim. We have to credit Lim. And purchases is an expense. We have to debit purchases. Purchases account is already there. So we have to just write there. Purchases account is already there. We have to write there 2400. What date? Date is very important. 8th. No, 8th. From whom? From Lim, isn't it? Yes, Lim. So you are right, Lim. So purchase account is debited with Lim.
Purchase account is debited with a credit to lim, and lim account will be credited. It is lim account. You have to prepare lim account. Lim account. You have to prepare. So October. $2,400. So why are we crediting lim? Because we purchased from him. Understood? This is how it is. This is how you have to understand the concepts. Very clear, very clear. Now it should be crystal clear. Now let us move forward. So then, sold goods to owner for 1100. Sold goods to owner. So when we sell, obviously owner will receive. So the owner is the receiver. Account owner receives. Owner receives. So owner receives. So owner account will be debited. Debit the account that receives, right? So owner account will be debited and sales account will be credited. Sales account is already there, so we have to prepare owner account and we have to write in sales account. So owner account and sales account. Owner account. Owner account. So owner account will be debited. Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Owner account is debited. Why? Because we have sold in sales. Sales. Owner account is debited with sales 1100. So now owner account is debited. Sales account is already there. So in sales account we have to write now. We have to write it in sales. Owner account. October 8. Owner account. 1100. Is it clear? So this is how it is. Okay. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have returned. So it is purchase returns. Purchase returns to Tina 100. So and it is on 10th. Purchase returns Tina 100. Purchase returns Tina. Purchase returns Tina. Tina. Where is Tina? Tina. Purchase returns Tina 100. So, why we have debited? Purchase returns. So next. All goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to him. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives us back. We had sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali, 11, sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver. He is the giver. Credit the giver. He is the giver of the goods. So October 11th. Why are we crediting? Because of sales returns. So now October 11th. And what is the amount? Loan to only 300. No, you want to read 300. Ali 300, sales returns 300. So there is no more. So he has returned everything. So sales returns account 300. We have to debit. Sales return account will be debited with Ali's account 300. So this is how it is. Okay. So next, this is activity 2.1. So now what you can do, you can try working out activity 2.2. So below are the financial transaction for Penn's business. Post the transactions to the ledger account. All goods are bought and sold on credit. Bought goods from Ting that cost 5,000 less trade discount of 15%. So sold goods to Lee for 1,000. So return goods costing 500 less discount to Ting. So purchase from V that cost 4,800 from trade discount before trade discount of 20%. Paid Ting all money out. Paid V for goods bought on 15 November. Received full payment from V. So what you can do, you can try working out this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day. Dear students, welcome back to Shastra's virtual classroom. So this is activity 2.2, credit transactions, from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business. Penge or Peng or whatever. So business post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make the list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, Tinge account. So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, Tinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return goods costing 500 less trade discount to Tinge. So again you are returning the goods. This is return goods. So you are returning to Tinge. So who is Tinge? So it is he is a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 5 15s of 45. So 45. 5 15s of 45 means 15% of this. So 465. 65 or 55? 55. Correct, no? 5 15s of 45. So 55. 55. Okay. So purchase goods from V. So again purchases. Purchase account is already there. So V. So cost 4800 less trade discount of 20%. So this should be recorded at 4800 minus 20%. So 4800 minus 20% is so 48. $3,840. So 3,840. So you have to record it at 3,840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you have paid to Tinge. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from lay. So that will also be recorded in bank account. So how many accounts should we open? One, 2, 3, 4, 5, 6, 7. We have to open 7 accounts. So first you bought goods from Tinge that cost 5,000. So first you prepare purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 4,250, 4,250, because purchases is an expense. So expense account is always debited 4,250. So date always you write the dollars. Amount you have to always write. Don't forget to write the dollars. And what is the date? November 1. And it is sold to, it is bought from Tinge. So November 1. So see purchases account debit to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. So Tinge account will be credited. Why? Because he is the giver. When you purchase, Tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next, the entry is complete. So the entry is complete. Purchases account will be debited with pinch. Pinch account will be credited with purchases. So next, sold goods to leave for 1000. Sold goods to leave. Sales and leave. Sales account. Leave account. Sales account and leave account. So how much is sales sold goods to leave for 1000 and November 5th. November 5th, 1000. November 5th, 1000 credit to sales because sales is an income. So credit all incomes and gains. So 5th, so leave because leave is the receiver of goods. So this side is always debit. This side is always credit by default. This is always debit. This side is always debit. This side is always credit by default. So dollar November 5th. So 1000. Why are we debiting Lee? Because we have sold him. Sales. So we have sold him. So debit, credit. Sales account will be credited because it's an income. Lee account will be debited because he is the receiver of the goods. Okay. Then comes next. Next. Return goods costing 500 less discount to tinge. So we are returning the goods worth 500, but after discount it is 455. So return goods means these are purchase returns. Tinge account is already there. Purchase returns, tinge. So purchase returns. So purchase returns account. Purchase returns account. So what is the value? 455. So purchase returns. Purchases is a debit. So it is always debit balance. Purchase returns is reverse of purchases. So it's a credit. So 455. So what date? When we have returned? We have returned on 10th. November 10. November 10 we have returned. November 10. So why? To whom we have returned? We have returned to Tinge. We have returned to Tinge. So Tinge. So what we have to do? We have to debit Tinge. Now we have credited purchase returns. Now we have to debit Tinge. Tinge we have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit Tinge. 400. Always write the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V. And it is on 15th. 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 November 15th. Purchases account will be debited 3,840. 3,840. So purchase account will be debited 3,840. We have purchased from way. Okay. So that's why we have to write V here. So we have purchased from V. So purchases account will be debited. Now we have to write it to V account. We have to open, if it is not there, we have to open V account. So when we purchase, V would have given us the goods. So because we have purchases account, we have to credit V with purchases 3,840. So now coming back again, next entry. So always write the dates. Next entry. Paid tinge all money owed. Paid V for goods bought on 15th November. So we have bought only once. So we have to pay tinge. We have to pay V, and we have to receive from Lee. So received. 20th we have paid to tinge and V. 20th we have to pay. We have to pay to tinge and V. So bank account. Bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to tinge and V. Tinge. How much we have to pay to tinge? Obviously the balance. When we have paid on November 20. November 20. So November 20 we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to tinge. So we have paid 3795 to tinge. Complete the entry. Complete the entry. How the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to tinge. We have paid 3,795. So we have to pay to another person. We have to pay to V. We have to pay to V. So let us see. We have to pay to V. V, how much we have purchased? We have purchased 3,840. So obviously we have to pay him 3,840, and it is on November 20th. November 20th we have to pay him. So 3,840 we have to pay. So what account will be debited? Bank account will be credited. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away 3,840. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1,000 from Lee. So we have received, what date we have received? We have received on November 25th. November 25th. We have received 1,000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption. So bank. So November 25. So from Lee, right? Lee 1,000. from D we have received. Over. That's all. So we have finished. What else is required? Below are the financial transactions for Peng's business. Post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself, then you can compare checking with the answer here, so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account we have paid everything, so there is no amount left over. Sales account is created. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account, we have purchased, we have paid. So bank account, we have paid, we have received. So that is the end. So activity 2.2 is done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just by answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be credited. Sale account will be credited, Dia account will be debited. Why? Because sale is an income, credit all incomes and gains, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods, Dia account will be debited. Buy machinery for use by business on credit from Joints Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in, asset account. So real account, debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchased goods on credit from Allen. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases. And we have taken Allen is the giver of the goods, and that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recording. Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So these are called purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Allen will receive. So debit the receiver. Debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in. So return goods to supplier. So some supplier, so they have not mentioned the name. So we can just write return goods to a supplier of purchases. So purchase returns. So because of purchase returns, we have received money. We have deposited in bank. So refund money to customer by check for goods returned. So now we have to give the money back. Some customer has given us the money. So he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out, bank account. Money will go out. So who will receive? Joint limited will receive. Receive full payment from DIA less cash discount. So we have received payment from DIA, receive full payment from DIA. So we have received money in bank and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DIA because she is the giver of money. So pay Alan for goods bought less cash discount. So here we have to pay Alan. Alan is the receiver of money, so Alan account will be debited. So we are paying. So money will go from bank, and discount received is again discount received. So the amount we are not going to pay because of discount. So that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is activity 2.3 David Hopkins the latest book. So okay. Dear friends, welcome back to Shasha's virtual classroom. This is a practical practice questions from David Hopkins lesson number 2 credit transactions. So which of the following transactions? So before uh, attempting this, before having a look at these answers, you can try answering yourself and you can just cross check with the solutions with the discussion. So always get back to me in case you have any doubts by way of comment in the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or come in. Cash sales, money doesn't go or come in. Payment to a customer. So when we pay, obviously money is paid, is money is credited. So bank account is credited because payment by a customer. Sorry, see this is payment by a customer. Payment by a customer means we will receive, will not pay. So payment to a supplier. Yes, payment to a supplier is something we pay, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 30. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded at 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So it's a purchase. It is a purchase for Joe's. And it is Joe's books means it is purchase. In Maria's books it's a sale, but in Joe's books it's a purchase. So be careful. So purchases. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. It will never be recorded at gross 200. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170, Maria account 170. This is the right answer. Okay. So next. So next, Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay, Myra sold goods to Zara on credit to Zara on 1st July. The goods are priced at 1000, but Myra allowed Zara a trade discount of 10%. So they will be recorded at 900. Okay, and offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded, this will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold. So sales entry will be recorded. Myra has sold, sales entry will be recorded. Sales entry will be recorded. Okay. So it will be recorded at 900. Yes. Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So to 882. So this is the entry, not this, not this, not this, not this. These are exam style questions, and this type of questions will come in here. Be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to the ledger accounts. All goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the way below this video. So we'll catch up in the next class with a new lesson. So till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books are books of prime entry. So these are known as books of prime entry. So books of prime entry. So junior had the following credit purchases. Junior is the name of the trader. So junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 credit discount. Okay. So purchase goods from Cora for 10,000 less trade discount of 20%. So this will be recorded at 8,000. So this will be recorded at 8,000. So Cora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so 5% of this is 400. So then purchase goods from Prem 14,000 allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000. And cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Cora Cora cost 400 less 10%. So you are sold to Gora at a discount of 20%. So you're receiving back 400. So 400 minus 20% is 4 to the 8. So 80, 320. So it will be recorded at 320. Purchase goods from Cora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 12,800. It will be recorded 12,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Cora and Prem. So payment has been made. So enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase, journal, record all purchases, individual purchases, and purchase returns journal, record all purchase returns, and cash book. So record cash payments, cash payments and discount. So cash book for payments and discount, cash discount. So 3 books we have to write: purchase journal, purchase returns journal, and 3 books of prime entry, and post them to the ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase return journal, purchase returns account. So then Cora account, Prem account, discount received account, so these are the ledger accounts we need to prepare: 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future problems, future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we'll start with this. So if you have already learned in school, you can try your on your own, and then you can cross check with the solution here. So this is how we are going to journal purchase returns journal. Okay. So let us first prepare purchase journal. Purchase journal. So name of the supplier, because we purchased from supplier. Name of the supplier, invoice number, amount in dollars. Okay. So first, what is the date? So we have purchased on 1st November. Number 1 we have purchased. So we have purchased from Cora. We have purchased from Cora. Invoice number is given. Invoice number is not given, so don't worry. So it should be recorded at 8,000. See, remember always, trade discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Purchase goods from Prem. Again, purchase goods from Prem. So again, goods from Prem, that is on 2nd November. So 2nd November from Prem. So the amount is 14,000. Amount is 14,000. Next. Again, you have purchased goods from Cora for 16,000. So at a rate discount of 20%. Again from Cora. What date? It is on 5th November. You have purchased on 5th November from Cora. So how much? What is the amount? $12,800. So what is the total purchases? So 8 plus 14, 22, 22, 34,800. So these are the total purchases. This is purchase journal. Now we need to prepare purchase returns journal. Purchase returns journal. So what is the date again here? You have to write the date. You have to write name of the supplier, so and the amount. So what date? Return goods on 4th November. So November 4th. So what is the amount? 320. So from to whom we have returned? Cora. Cora. See, remember on purchase journal, we're recording individual. Okay, so we are very important. Okay, so this you will remember when you are preparing control accounts, when you are at that time you may need this knowledge. So at that time you may need this knowledge because you have to understand, and this thing you have to accounts lesson of control accounts. So these are all interrelated. Okay, so this is how it is. Then next, what is the next prime entry? Book of prime entry, cash book. So we have to prepare cash book. So cash book, what all will come? Discount column will come. Since we'll be paying so this side is always credit, this side is always debit. It's, so this is discount column. This is discount. This is cash. Cash column. So it is in dollars. So this is also in dollars. So here, next first cash transaction, no cash transaction, no cash transaction, no cash transaction. Check frame. Sim. Cora. But here we need to calculate what are the again you have purchase purchased, returned. So 8,000 12,800 minus how much you have returned? You have returned 320 worth 320. So this gives 8,000 plus 12,800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount. So discount 400. Already pay your returned goods worth 320. So what is the discount you'll receive here in this case? In this case, the discount is so the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is cash discount will be different. So in this case, here also it's 5% cash discount. Here also it's 5% cash discount. So there is no variance and it is the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 19,456. So to frame, how much you have to pay? Frame, so the entire amount you have to pay. So frame is 14,000. Discount is 280. Discount is 280. 14,000. Frame 14,000. Minus 280. 10,000. 13,720. So you have to pay 13,000. So this is the amount you have paid to frame. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November 9th. So you have made the payment of November 9th. So this is the catch. This is how you have to receive record. So 280. So the cash and this. So this is done. So cash account is done. So now Okay. So now we have to prepare the ledger accounts. So what are the various ledger accounts we need to prepare? Okay. So purchase account is the first. We have to post all the transactions at 10th November. So what we have to do 10th November. So November 10. So what is the date? What is the amount of purchases? Total purchases? We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. I mean purchase journal we have prepared. So 34,800. So we have to prepare 34,800. So you are right, 34,800. $34,800. So purchase journal. See, this logistics is very important. So when you're doing control accounts at this time, you will come to know. So you have to reconcile so many. It's a very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but we enter it in purchases account, we record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So November 10, purchase returns journal. So what is it? 320. So now we have to prepare other accounts, like Cora account. So we have purchased from Cora, so Cora's account will be credited. So always write the amount. Always write the amount. Cora account. So Cora account will be credited. So what date when we have purchased? So you can see from here itself. Cora we have purchased on 1st and 5th. 1st and 5th. First and 5th. So on first it is 8,000, 5th it is 12,800. 12,800. So this is purchases. Purchase. This is purchase. Remember, you are writing purchase here, not purchase journal. Okay. Purchase. Purchase 8,000. Purchase 12,800. So here this side. So it will be. So this is number one. Because purchase journal, it is a journal. Okay. So purchase journal. So this is Cora ledger account. So now next, what is it? So what date you have returned? You have returned on 4th November. So how much? 320. Yes, 320. So next, frame account. So how much is frame account? So frame account is 14,000. So frame account is 14,000. So this is on what date? This is on 2nd November. Purchases 14,000. Okay. So now come to discount received. So again, discount received is again. So discount received is again. So it will be credited. So individually you have to write, or you can write the total. So so discount received is 1304, 13,004. So we have to record that discount received 13,004. $13,004. So November 10th. So cash book. For both the book of prime entry and a book ledger also. So cash book is both book of prime entry and ledger. So no more, it is not required since we have already prepared. So that's all. So that's the end of this question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important prerequisite for you to score good marks. So welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of in lease cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic, but some students may be confused, a bit confused. So let us discuss. So what you can do is before trying having a look at looking at this particular session, you can just try working out the problem on your own so that your understanding is clear. So always try to work out on your own and then compare the answers so that the understanding is clear. Okay. So basically, I will inform. I would like to uh, let you know that this is a format. Particular, you have to write this in a particular format or particular what do you say in a particular style. So you cannot write it as however you want. So that style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between so there should be one line.